Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, good morning, guten tag, guten abend. For those of you who are new to us, we are the TSTW SYS 008 traders, and our website is www.stochastic-macd.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Today is the 16th of November 2013, and the time in London is 26 minutes past 4 p.m. In New York, 26 minutes past 11 p.m. Happy Saturday to you all. The title of this video is How to Swing Trade Using the RSI Indicator. The RSI stands for Relative Strength Index. Is a technical oscillator that is a range-bound indicator between the 30 level and a 70 level. When the relative strength index indicator is below the level of 30, it is considered as oversold. Not the price, but the RSI itself is oversold. All right? All right? When the RSI is above the level of 70, is considered as overbought, all right? And when the RSI is overbought, going to the mind of other traders, most traders will be looking for opportunity to sell. When the RSI is below 30, majority of market participants will look for opportunity to buy. I need to mention to traders that most professional traders use the RSI instead of the stochastic indicator. So be aware of it. Most professional traders use the relative strength index indicator. But there is something else that we need to pay attention to if we want to swing trade using the relative strength indicator. As always, the guidelines is very simple. Whether we are day trading or swing trading, we don't want to violate the market principle or the market patterns. All right? The key element I want today to remember: do not violate the market patterns if you are using the RSI indicator, because it's an oscillator. Okay, it's oscillating from the level of 30 to the level of 70. But if you are using the RSI indicator, the relative strength index indicator, and you are violating the market patterns, you are likely to make a lot of wrong mistakes. All right? So what are the market patterns? Traders that are already following us know what I'm about to say. But I'm doing this for new traders. There are only 3 market patterns, not price pattern, market patterns. All right? We have the horizontal market pattern. All right? We have what we call a rising market pattern when the price is in a rising channel. And we have finally a declining channel, a declining market pattern. These are 3 things that the price is doing all the time. Whether you are trading commodity, okay, currencies, stocks, futures, you will see the price will do exactly these 3, okay, move: horizontal move, rising move, okay, and down move. Now, pay attention carefully, because I want you to understand this so you don't get into the trap when you are using the RSI for swing trading. You have to understand also that I'm using the RSI period 20 right here, all right? I don't want to use the RSI 14, all right, because most, even some software, will only set the RSI to period 14. I don't know why, but they should allow traders to be able to change the setting of their indicators, all right? So that's why I'm using RSI period 20, all right? Now, what is happening is that, the RSI is telling us when to buy and when to sell, okay? The general rules is that when the RSI is above the level of 50, right here, all right? Trader will look for opportunity to buy, all right? If it's above 50, okay, it's bullish. Okay, the magnitude of recent gain is superior to the magnitude of recent loss. That's the theory. And when the RSI is below 50, okay, a trader will give priority to sell signal. That's the theory. But I also draw the market pattern on the RSI itself. You see here, the RSI was in a rising channel. Are you following me right here? Here again, the RSI was in a declining channel. Here again, the RSI was in a declining channel. When you are using the RSI, try to draw the channel around the RSI itself, because the origin of a swing trading, okay, is connected to the horizontal market pattern. So price oscillating between two levels, okay, a support level and a resistance level. So swing traders love this because the market is consolidating. That's what we call a balanced market or horizontal market pattern. This is the beginning of swing trading, when the market is consolidating. So the RSI will be oversold when the price reaches the lower part of the consolidation. All right, there will be accumulation at the base of the horizontal channel, and they will buy, and the price will go to the upper end of the consolidation, and then we will have what we call a distribution. So we are having accumulation, distribution, accumulation, distribution, accumulation, distribution, because the price is not going anywhere. The price is stuck between two levels. But the madness, all right, what's going on now in this market, a distorted market right now, is that there are some programs that is programmed to sell whenever the RSI is overbought without paying attention to the market patterns, all right? So force it down, force it up. Force it down, force it up. This is not normal, okay? Be aware of it. It's not normal. Sometimes the problem will start, okay, when traders try to apply the RSI. So suppose you were here, you buy here, the RSI oversold, you set your RSI to 14, it was oversold, maybe you're on a 2-hour chart, it was oversold, and you buy here. The price went up and you say, yes, this RSI 14 is what I should use on my 2-hour chart, okay? You reach this level, your RSI 14 was overbought, you sell again. You say, wow, this indicator is the best indicator in the whole world. But you didn't pay attention to the market pattern. You don't know why the price was following it. Okay, price went down to this level. Maybe you're on a daily chart, your RSI was oversold, the market was consolidating, but you didn't know that it was because of the market pattern. You thought that it's because your RSI is set at period 20 on a daily chart. It was oversold, you buy here. It went up. And then the RSI was overbought right here, and you sell. And it went down again. You say, wow, the RSI 20 is the best setting on a daily chart. So you build a trading system on a daily chart based on the RSI 20, but you did not know that it's just because the market was consolidating that's why your RSI was working like a magic wand. Now suddenly, all right, one day, all right, the market start trending, break above the consolidation stage, start going up. So this time, your RSI was overbought, okay, like here, you see, okay, was overbought, and you start selling, and this time, your RSI 20 was not working anymore. So it was overbought here, okay, you sell, the price did not go down. You are wondering, so you change your setting to 30 or to 14, or you keep changing your setting, you're still changing your trading system, and you are wondering why this time your RSI that was working like a magic wand before was not working. But it's just because, okay, the price was in a rising channel. So the rule number one for swing trading when we are using the RSI is that do not sell when the RSI is overbought, okay? Why? The price is in a rising channel, unless the price is at a convergence point, all right? Unless you receive a convergence signal, all right? So the rule number one, when we are swing trading using the RSI, do not sell, okay? Do not sell if the RSI is overbought, but the price is in a rising channel. Look instead for opportunity to buy at the lower part of the rising channel, even though the RSI is in overbought zone. So traders that will apply that strategy here will avoid losing. So they will be waiting along the base of the rising channel here, looking for opportunity to buy not buy anyhow, by using a multiple time frame trading method on the edge. You see now, the RSI in this case, look, was in a declining channel, all right? But the price in a rising channel. Because why? The RSI went up, it's a range-bound indicator, reached its highest level, all right? Went even to the level of 90 level. So the RSI must reset itself, returning to its equilibrium level. All right? We are talking about indicator, not the price. As the RSI was returning back to its equilibrium level, meaning to the 30 level, the price was going up. So if you were trading the RSI, you will be busy selling. So you are selling the RSI, yes, you sell the RSI go down, but the price did not go down. So you want to trade the price instead of trading the RSI. Okay, if the RSI is overbought, okay, and the price is in a rising channel, you want to look for opportunity to sell. That will be for scalping or short-term day trading purposes. So while your RSI is overbought and the price on the upper end of the rising channel on the weekly chart, as I have here, I will switch to a lower time frame looking for some scalping or day trading opportunity, because I know some traders, okay, will try to sell, but the price is not going to go down for a long period of time. So my strategy is a short-term trading strategy. But for swing trading purposes, because I want to remain in the market for a few days or even a few weeks, the best approach when the RSI is overbought and the price in the rising channel, give priority to bullish signal on the lower part of the band. So you may not decide to participate at those who are selling at this because it's a risky trade. You may do it successfully, but it's a risky trade, all right? You will prefer to concentrate on the lower end of the rising channel, which means you are using your RSI in harmony with the market patterns. There is another approach that one can use. You see here, the RSI was in a rising channel, all right? But the price, I hope you can see on your chart, okay? All right. Well, 1 second, please. While I'm adjusting my chart. Okay. Okay. I'll bring everything back to normal again because I think I've done a bit too much now. You see here the RSI was in a rising channel, but during that time, okay. Let's see what the price was doing. The RSI was in a rising channel, and the price also was was going up. Okay, in this session here, it's not very clear. Okay, this session here, the price was going up. Okay, so in that scenario, as the RSI was in a rising channel and the price also is rising, okay, we are not trading the RSI, we are trading the price. You can draw your channel or your trend line and wait for the price to pull back, because the RSI is in the rising channel, okay, like this, going up, it went up, and then pull back. We want to look for opportunity to buy, trading the price itself on the edge of the lower bound of the channel. All right? Here, the RSI, as you can see, was in a declining channel. You will be looking for opportunity to sell. You are thinking to sell. But if you are trading the RSI alone, you will get into trouble. So RSI is in a declining channel. Okay, what the price is doing, because you are trading the price. Okay, you have to see that the price was first in a rising channel. Okay, so what do? Price in a rising channel, we want to look for opportunity to buy at the lower part of the channel using the market pattern until the price failed to display a new higher high. Where is it? The new higher high is right here. If the price is in a rising channel and the price failed to display a new higher high, it's a weakness. If the price in a declining channel and the price failed to display a new lower low, it's a weakness. So though the price in a rising channel, we can afford to keep buying anyhow. We keep eyes on the price. You see here, it displays higher high, it pulled back. If you receive a signal here, we will buy. This time, at this point in time, you see, it displays a lower high right here before pulling back. In fact, it was just went down like this. In this case, we need to be careful. All right? So when we are in a rising channel and the price display a lower high before retesting the lower part of the rising channel, it's a weakness. We don't want to force it here because there's a high channel you may break through it. But if it displays high and pull back like this, doesn't mean magic one definitely will turn around. We will use again a multiple time frame trading method, okay, to participate in the trade. If the signal fail, okay, we come out. All right. So you see now, instead of spending most of our time looking at the RSI, okay, we should be, okay, concentrating on the price itself to avoid, okay, critical swing trading mistakes. All right, in order to use the RSI successfully, the professional trader, one must align the RSI signal with the market patterns. Okay, here you can see that the RSI was declining, the price was going up, telling us that we have what we call, okay, a bearish divergence. Price was going up, but the bearish divergence is an indirect signal. Okay, we will wait for the price to convert to confirm, okay, the divergence. Yes, there is the RSI, the relative strength index is telling us that we have a bearish divergence because the price is going up while the relative strength was going down. It's a warning. We will wait until the price confirms the signal, which means come out of the bullish channel and retest it right here. Right here, you will sell right here. Now, the warning is confirmed by the price, which has given us now a direct signal. Break below the rising channel and retest it right here. But what is happening for swing traders, as soon as they see a divergence, they start selling. Okay, it may work for a while, but sometimes it doesn't work all the time. Okay, we want to use, okay, the high probability trade setups. There's one here. Divergence, bearish divergence, allow the price to come out of the bullish channel and to retest it and to find a resistance, meaning that we receive a sell signal here using a multiple time frame trading method. Now you can see that the RSI was in a declining channel. Now it's out of the declining channel, which means now the bullish momentum is increasing. This is what looking at the RSI or interpreting the RSI itself. Okay, it was in a declining channel. Now it come out of it here. It's telling us that the bullish momentum is increasing. Good. Now what is the price doing? The number one indicator. Look at the orange trend line. See? The price break above, okay, the trend line. Great. So we will look for opportunity to buy. The RSI is coming out of a bearish channel. The price also break above, okay, a declining channel. They are in harmony. You see? In fact, the RSI was mimicking the price. If the price does not move, the RSI will not move. Remember that. So that's why the price is the number one indicator, okay? All right. Here there was a beautiful signal that I can point out for traders. When there is a harmony, the RSI and the price giving almost the same signal. You can see that the RSI was in a declining channel before the price because we see a bearish divergence, okay? The RSI was in a declining channel, okay, oscillating here. But the price was, during that time, in a rising channel. Suddenly, the price, okay, confirmed the warning that the RSI was giving us as it was showing us the divergence. Now the price itself is doing exactly what the RSI was warning us about. So the RSI was giving a warning here that soon, guys, you will have, okay, a declining channel, provided that the price confirm what I'm saying to you. And now the price confirming and start doing exactly what the RSI start doing here. So what do? We take advantage of it by drawing the channel and the trend line. You see, the blue trend line, the blue channel. Now this orange trend line. So we will sell on the edge, trading on the edge, trading on the edge at a hot spot trading zone. These are beautiful swing trading point where we can use a multiple time frame trading method to participate in a trade. All right? So as I explained to you in some of my video, you are swing trading, you know when you are about to enter the trade, and also you know where you're going to come out because you are swing trading from A to B. So when you enter a swing trade, you must know your exit point. Otherwise, that's not swing trading. You are swing to A to B. All right? Swinging. Swing from A to B. All right? That's why you are doing swing trading. All right? That's what they call swing trading. All right? Now, what's happening now? So the RSI is overbought again. You see here? So traders that are trading the RSI instead of trading the price, This is what's going on. Crazy program, crazy software. I don't know who designed those software. They should contact me. I can give them some advice to build a better software for this market. All right. So now you see now, the RSI was overbought. What's happening? People are trying to sell. You see, they are wasting the time of bulls. You see, these people here, they were selling. They were just wasting people time. All right. But okay. It was great that in fact those who were right, okay, are winning. Sometimes those who were right will lose and those who were wrong will win. In this case, those who were right were winning. The price break above a bearish trend line, you see, the number one, you see. See the blue trend line, the blue channel here, all right? Break above it. So, in fact, people were expecting it to pull back a little bit to retest it, but it did not. This happens sometimes when we have what we call horizontal channel. Sometimes the price will fail to retest the end of the channel, which gives us a low risk entry point. But sometimes the price will not do that. So what? Okay, watch the horizontal channel. Okay, if that is the case, watch the horizontal channel. You want to buy, you to buy at a support level. See this point, this channel, this line that I draw here. If I color it now into red, you see on your charts. Okay. All right, you see now, point. You see, so you say, okay, why is not coming now? You prefer to buy on the edge here. That would be gorgeous, isn't it? But they don't want to do that. So you want to control your risk. So you want to buy above, okay, this support level and high your stop loss below that level. All right, okay. Can be messy sometimes where the price will do all this, but finally come back and retest it. Can be messy sometimes, okay. I use a multiple time frame trading method. You see there is another level here. You see this level here. If I extend that line, you can see that that's where the price came and retested. See, instead of coming all the way to the trend line, they stop on this horizontal channel. So you will see that sometime when the price will fail to retest the channel, but will stop hanging up there. Look out for the horizontal support level, okay? Now, the reason why we are doing these videos now is that because we have traders that are using the TSCWSY008, which is a swing trading system. All right? So now the RSI, my RSI 20 that I'm using here on the weekly chart is overbought, okay? But it doesn't mean that I should sell because overbought does not mean sell. Trade the price. What is the price doing? So, all right, we want to trade the price, okay? So the price, what the price has done, the price came out of a bearish channel. So if out of the bearish channel, if it's going to be bearish again, well, it will go again in another bearish channel. So if you want to sell it, wait until you see another bearish channel where you position yourself on the upper end, okay, of your declining channel to trade on the edge, all right, at a hot spot, a trading zone. You see the mistakes now? All right. On the other hand, ladies and gentlemen, I can do this exercise over and over. All right. Here you can see that the RSI was in a declining channel. Okay. But you will notice that, again, you wait for the price, okay, to confirm the signal, okay, trend line be broken or price come out of a channel and retest the channel. So whenever you see a warning given by the RSI, the relative strength index indicator, okay, you want to confirm it with the price, at least trend line be broken, all right? And then, okay, price goes into, okay, a declining channel. It will go to a declining channel, as I explained to you in the beginning of this video. So to avoid swing trading mistakes using the RSI indicator, one must always use the market pattern. You want to sell, you want to see a bearish channel. You want to buy, you want to see a bullish channel. The only time, ladies and gentlemen, that we sell in a rising channel is when the price reaches, okay, a convergent point, or when the price fails to display a new, okay, higher high. But as the price fails to display a new higher high, it can be only, okay, come on, how can I say this to you? It can be only, okay, that a signal that the momentum is weakening. But sometimes you may have a momentum that gets weak for a while for different reasons, or maybe economy news may get weak for a while, price will fail to display new high, and then price go horizontal for a while, and then price go back again into the rising channel. You see sometimes when the price will come out of a rising channel like it did here, but we go back inside and resume, okay, the bullish trend. Sometimes the price may come out of a declining channel, okay, above it, only to go back inside again and resume the bearish trend line, all right? As always, if we combine the technical, we are paying attention to the economy news, we check the fundamental, okay, the market environment, we are likely to understand why the price, okay, is out of the channel, but quickly went back inside it, okay, all right? So to use the RSI indicator, like professional traders, one must not trade the RSI when one sees, okay, a signal given by the RSI. One must always confirm the signal by the price sell, which is the number one indicator. If the price does not move, the RSI may not move. Sometimes the RSI will give, okay, a leading, okay, a signal, which means you can see here, it was telling us that divergence, okay, which is a leading signal, a leading warning, but do not trade the RSI. Wait until the price confirm the warning. Right here, you can see there was a bearish divergence. RSI goes into declining channel, but the price was in the rising channel. Wait until the price itself go into, okay, a declining channel. So you see here, you see now, well, the divergence now confirmed. The price now doing exactly what the RSI is doing before. I will sell here, all right? And then I will draw my bearish trend line and look for opportunity to sell, okay, at any point. On the other hand, when the RSI is overbought, or we see the RSI is rising and the price is going down, is okay, what we call a bullish divergence. We will not start buying straight away. We wait patiently until the price itself goes also into a rising channel. All right. Sometimes you will see the RSI and the price will do exactly the same thing, which means they are in harmony. Both will be in a declining channel or in a horizontal channel or in a rising channel. As you can see here, the price has from this point onward, where I'm going to put a vertical line here. You can see that from this point onward, all right, where I put my vertical line, okay, up to where we are today, for this stock, Baidu, it's okay, a Chinese company. This is Baidu, all right. So those who are Asian know about this Baidu. Okay, this is the Google of Asia. So you can see that this is both the RSI and the price were in harmony. So the RSI from this vertical line to this vertical line, the RSI was in a declining channel. The price also was in a declining channel. The RSI came out of okay, the bearish channel. The price also came out of the bearish channel. Though the RSI is overbought, the RSI 20 on this weekly chart is overbought, the price is not bearish. One should not sell when the RSI is overbought. It's not about the setting, it's about the price. I can change my setting to 10, to 20, or to 15, or to 14, all right? But as you can see, my RSI 20 is above 70. A lot of traders were selling here, but they are kicked out of the trade, and the price going up because the price is out of a bearish channel, all right? Now, this is a setup. So we see like this, all right, for swing trading purposes. Always, ladies and gentlemen, we receive the setup. Do not buy or sell when you see the setup. Now, wait for a signal and then select a low-risk entry point. Check the economy news relating to the financial instrument that you are trading on Google Finance, on Yahoo Finance, okay? And then use the trading triangle. The market first, the S&P 500, the sector, okay? And before the individual financial instrument. Pay attention to the market leaders, all right? Market leaders. This is Nasdaq 100 stock, Baidu. So we will check Google and Apple stock to see what they are doing, all right? These are market leaders. You are trading Dow 30, check the market leaders, okay? ExxonMobil, McDonald's, check this stock and see what the market leaders are doing. And then, okay, you pay attention to the economy news, okay? These are just a quick verification. It may sound difficult, but it's not. Just quick verification that you are doing, so you don't just rush into it using the technical alone, but you pay attention to the fundamental traders, especially the hedge funds and the banks that are, okay, moving the market, okay? All right? And the next thing that you need to pay attention to, always when you are swing trading, you must check the risk-reward ratio. You must also know your exit point. Is very important because swing trading, you are entering the trade at point A and exiting the trade at the point B. Now, looking at this chart now, the RSI is overbought, all right? There's a different way we can use the RSI. I can continue this discussion for hours, but I will have to cut it short at one point. But before I close it, let me remove all my drawing, and I want to show you something else, okay, in this video that you must not, you must promise me that you will never forget, okay? Which I've been talking about for some time, especially to the TSTWS 008 cycle point. Price went down from A to B, and price returned back to the point A again, which is the starting point. Okay, when the price, okay, turn around, okay, 180 degree or minus 180 degree, we have a cycle point. All right, so you see here the price going down, okay, like this, and then return back to this point. This is a cycle point. All right, either 180 or minus 180 degree. That's we have a cycle point. See how the price is sitting on the cycle point now. All right, break above the cycle point and retest it. Boom. On this weekly chart this week, that's why traders were buying at the cycle point here. It's a powerful tool. Now, we are talking about how we can use the RSI. All right. So now, what's the target point? So the target point, all right, this is in the form of, because the price went like this, then it looks like a triangle for me. So we'll use this distance from here to here, and we will project it to the upper end, okay? Though our RSI, okay, I remove all my line. Now you can see the 70 level. I'll put it back. Okay, that's the 70 level. It's overbought, above 70. Though it's overbought, okay, the price went above the cycle point. Normally, if the price did find a resistance at the cycle point and we receive a sell signal here, all right, we will look for opportunity to sell. But we know that the price came out of, okay, a declining channel and ran fast, far away from the declining channel, which is bullish. So it's not that it came out of the bearish channel. It was hanging around the channel. It ran away. So it's bullish. Okay, it's bullish. All right. So we don't want to be very enthusiastic to sell it here. The best place that we will look for opportunity to sell, though our RSI is already overbought, telling us that the price is already overbought, but the price at a cycle point is a kind of equilibrium price level. It's at a cycle point. The RSI is overbought, but the price is not overbought. The price may be considered overbought if Baidu stock reaches this price level around $211. Okay, when it reaches the $211 level, which is the target level for this projection, okay, that we did now here, that will be a target point. The professionals know that as the price is approaching this level of $211, they will be willing to secure their gain and take some profit. So when a price is approaching this level, does not mean that the price will definitely go down, but there is a possibility that around the level of $211, that we may see a kind of a little bit of profit taking. The price may wiggle a little bit, went down a little bit, before going back above the 211 level. If it goes back above the 211 level and the final support, game on. Do not force it, buy instead. All right? So the best approach to use the RSI overbought is when the price reaches a target level. The price not at the target level. If it was at the target level, yes, we will switch to our lower term, our signal time frame, looking for a signal to sell. Because the RSI is overbought and the price, the number one indicator, is also at a target level. We will draw our trend line, our channel, without forcing it. On the other hand, when the RSI is oversold, we will also look for a target point using the chart pattern, okay, chart pattern price target level. We will use things like, okay, Elliott wave pattern, Fibonacci patterns, okay. This will help us to know where are the convergence signal. Right now, if the RSI is overbought, and the price also is at a target point, all right, or the RSI is oversold and the price also is at a target point, we will look for opportunity, okay, to trade the overbought or the oversold RSI indicator. But if the RSI is the relative strength index indicator is overbought or oversold, and the price is not at the target point, we need to be very cautious. All right. So to summarize everything to trader must use the market patterns by all means. Trade the price. Do not trade the RSI. Very important. All right. So you want to get that one right now. That you can do it on the hourly chart, 2 hour chart, 4 hour chart. When we go now to the 4-hour chart, okay, let's see, all right, you will see that traders are making the same mistake. Or the mistake that they are making, they are violating the market principle. Price in a rising channel. Here on the 2-hour chart, you can see here, okay, the same thing we are talking about. The price is in a rising channel, but the RSI was overbought for some time, all right? You want the price to come out of the channel at least before you may look for opportunity to sell. You want to sell at a resistance level. You want to buy at a support level. If the price goes above a resistance level, the resistance level becomes a support level. When the price dips below a support level and the final resistance, that support level becomes a resistance level. I hope you have learned something from this video about how to swing trade using the RSI indicator, and we'll put it into use to make excellent swing trading decision. To know more about this relative strength index indicator, go to www.dayprotraders.com. Check the RSI chart, the RSI indicator, web pages, to learn more about this indicator. For swing trading, to learn to swing trade, go to www.stochasticmarkd.com. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008 traders. Speak to you soon.